waiting, watching the clock. It's 4 o'clock. It's got to stop. Tell him, take no more. She practices her speech as he opens the door. She rolls over, pretends to sleep as he looks her over. She lies and says she's in love with him. Can't find a better man.
Hey, it's Soleil, and this is episode 520 of the Orange Pill Investor. This is going to be a short one. I have got to hurry up and finalize my talking points and make my notes for the early bird True North that we're going to do at 10 Pacific, 1 Eastern. So let's make it happen, Captain. Quick tangent. So better dry powder. This account has 3,600 in options collateral, 4070 in, like, I guess this would be including margin. This is fake news. Subtract the two, that gives me $470, which isn't much. I could get a couple of shares of strategy. And so that's kind of the point. Is it better to buy 3 or 4 shares of something like this, which should go up to 100 again, because strategy has a mandate to have this trading somewhere between 99 and 101. So if they do that, you're kind of getting a 3%. Now, whether that takes them a week or a month is anybody's guess. But I think these opportunities will become fewer and farther between in the future. It's always possible that anything connected to Bitcoin could crash when Bitcoin crashes. And maybe that's even kind of like, maybe this does continue to happen forever, because if people are using this for dry powder, then you're gonna sell it when Bitcoin is at a 30% discount off of all-time highs. And so with this $400, should I buy this and take a couple of free percentage points, plus if it takes a month, I get paid 1% interest or something, whatever the hell the little dividend would be. I'd get paid like $1 per share. So that would be the least risky and most certain way of just making this a little bit more efficient. Even the ETFs, they like store their dry powder in like US treasuries, which is hilarious. But the other thing that I could do with $400 obviously would be, just buy a couple of shares of strategy. And if they pump, I pump. If they don't, I dump. I think either is fine. I'm going to go ahead and grab, well, we'll see what happens if I actually have to trade anything. I'm just going to start in this account. So I rolled, let's cover this first. So I rolled Cypher and Wolf offline with my brother-in-law because we copy trade these. And January 9th became available today, and unfortunately it's still not very liquid. The bid-ask spreads are pretty shit, but Cypher was traded well enough that what's up, Buffalo, that we were able to get some fills here. But I didn't really feel comfortable trading January 9th on Wolf. The liquidity just wasn't there. The bid-ask spread was between like $0 and $2 or something. It was just dumb. So there was tons and tons of positions and open interest and volume and stuff on the 1/16 date, because that's the monthly, I believe. So it was just easier to get fills here. But it's not like, January 9th was the best. I mean, it was the closest to 45 days, so that's why I preferred to trade January 9th for Cypher. But hitting 45 days as close to it as possible doesn't outweigh the liquidity. So the number one thing in any trade is position size. The number two especially for options, is liquidity. It's a lot. And you have to also figure it's going to be twice as hard to get out of a position, whether you win it or lose it, than it was to get into the position. So that's the reason why there's a difference in expiration dates here. It's just easier to get fills. So not like, oh yeah, 116 was better. No, it was just easier to trade. But with his couple of extra $100, I had him just buy like 2 shares of STRC. He'll get the 3% easy peasy once they pump it up to par. Plus, he might get paid a percent or something. I mean, collecting $3 on the price from 97 to the move from 97 to 100 plus $1 in interest is not like, it's not like earth shattering, but it's kind of just trying to squeeze every last little bit of efficiency out of something. And we know that cash is a melting ice cube. So for people who want to sit in cash for dry powder, like cash is just a guaranteed loss coin. So I try to like have just zero cash whatsoever. I mean, whatever I have to do to pay my mortgage this month, that's the amount of cash I try to sit on. And everybody has their own risk tolerance. If you're in it for the long haul and you can stomach the vol, then absolutely, I would have had him just buy a share of Strategy, or maybe even half a share of Tesla or something, just for fun. So let's see if I'm trading anything today, and then maybe I'll buy a few shares of STRC just so that me and him, because that was the first thing I was telling him about. He's like, well, do you own any? And I was like, no, but I'll buy a couple shares today, depending on how much buying power I've got. Which is a perfectly valid question, because somebody can tell you something and then it's like, well, are you doing it? And if the answer is no, then, maybe, not necessarily, but maybe you've already answered the question of whether they're serious or not. Yeah, I'm not trading anything today. So I'm just going to go ahead. Let's hit STRC. And if I give myself too little cash, then I'm not even going to be able to roll my strikes. So maybe I'll buy 3 shares. This shouldn't put me into margin. If it does, then I miscalculated. Yeah, there we go. I mean, I could buy one more and have $79. Yeah, why not? Wait, where's the shares I just bought? There we go. I'm gonna get one more. It's gonna give me precious little buying power to roll my strikes, but if I have to turn around and sell 1 share of Stretch and pay, if it goes up to 100 and if I pay short-term capital gains on $3, it's not going to be the end of the world. So let's just make sure I'm not using margin. Yeah, I got $82. Cool. Sweet. So that is all she wrote there. I'm going to probably do a little bit of a speed run. I had to explain myself a little bit yesterday because I guess we had a new viewer and he's like, what are you doing? Yes, Howard, I do have an appointment in an hour. So I gotta do a speed run and then, try to write down some talking points and cross my fingers and hope there's a clip-worthy banger in there somewhere. All right, skipping past all this bullshizzle. Tesla. Yeah, still a little bit of premium to collect here. Strategy, holding strong, so nothing to do but sit and wait there. Yeah, same. This one. So now that January 9th is available, I could try to roll this out. Let's just look at it. But when they come out with these new, yeah, see, look at the bid-ask spread between $4 and 14. Like, I can get a fill here somewhere, but this is just a pain in the ass to try to trade. It's saying that the mid price. Oh my god! So actually, this is even misleading. This is somewhere between a $4 credit and a $6 debit. That's dumb. Okay. Oops. So if I went ahead and tried to roll to 51, like I had already done, $400 credit. Yeah, I'm gonna sit on my hands. I might have to figure out a way that I can just hide these dollar shares that I bought. They're just kind of annoying. Cypher, 200 shares. Oh yeah, this is the one that the price is going against me. These will probably get called away unless I can figure out a way to roll them for a credit. I could roll out to like 45 days, I suppose. But we'll see what happens on Friday. Wait, is the market open on Friday? Or did they close for Black Friday? Yeah, I think they're open, right? Yeah, because these... Yeah, the market's open because the expiration date is Friday. Same, not ready to roll. To make sure that my Cypher doesn't get called away, because I'm a little bit more bullish on them, just because my mining stock homies are telling me that they are also an AI play. So I actually might trim some CLSK to make sure that my Cypher doesn't get called away. May just go ahead and do that. CLSK looks in line to get called away here, maybe even here. So nothing to do but sit and wait and trade those on Friday, eat a little bit of leftovers. $37 days to expiration. Pretty close to being ready to roll. But just rolling it out a week is probably not worth my time. I already rolled this one out to 51. So that is... Oh, that's because this is not grouped. Yeah, these are in a bad way. Down bad. So some more Cypher here. Looks potential for getting called away. Might be able to roll for a credit on Friday. We'll see what the price is doing. Yeah, everything else is down bad. If I roll to the 305 at 51 days, might be able to collect something. Yeah, $80 credit, and it's only worth 65. I mean, this is just me in desperation trying to generate any kind of premium here. You know what, let me check my... So I have just barely slightly negative theta. So once this hits, this might get me to positive. Oh, let me reshare without volume. Oh, come on. There we go. Okay. Big money, no whammies. Okay. This account is basically break even at this point. It's theta neutral. And my strategy positions are negative. My cipher position is is holding up both positions, end of the bargain here. All right, this is the former Misty Challenge account. Yeah, these are probably all in danger of getting called away. Maybe I'll move these positions over to Cipher. Tesla also threatening to be called away, which I will try to avoid. I'm trying to build more Tesla positions, not less. So if I have to sell some CLSK to fund my Tesla shares not being called away, I will do that. And whatever's left over, maybe I'll try to plow into Cipher. Yeah, these are all in danger of getting called away. What's my cost basis? So my cost basis on the Cipher shares is 15. So I'm basically breaking even here and keeping the premium that I collected on the cash secured puts and the covered calls. However, I'm gaining like $2 a share here plus the premium. So I'll try to protect those shares. In order, I'm going to protect my Tesla and Strategy, followed by Cipher. Depending on how much I have left over, maybe I'll take an iron position. That's the other one that my mining stock homies like. But it's much more expensive, but it might be nice to play around with it. I do prefer the more expensive, the better, really. Obviously, in this account, it's a 5K account. I'm not going to be trading iron, which would be, yeah, $4,600. That's putting a lot of eggs in one basket, even though I think the premiums are pretty nice. Yeah, 1% would be 46, so this is over 2%. So maybe if I peel off the CLSK, it'll make sense to add an iron here. Not ready. Yeah, same. You know what I might do though? Also, so I have to fill out I can't do it electronically, which is crazy in 2025, but I'm considering moving all of these positions back to the main account just so it's easier for me to trade them. All in one shot. Plus, when I collect, $1,000 premium in this account and $2 in the other, it's like, okay, I might be able to do more with the 3 combined than 1 here and 2 there. Just gives me more options. So this is kind of a pain in the ass, but I haven't moved everything from the challenge back where it came from. That is it. That's all we got for today. All right. Not a whole lot, just a little dry powder discussion. And what did I move? Like 1 position or something. So if you're trading your own accounts, you probably don't need to be looking at them every day. If you want to do low maintenance, obviously weeklies, maybe check once or twice a week, especially if you see the price moving. you see people talking about the we're so back, the price is going up. And if people are saying, buy the fucking dip, then the price is going down. You kind of don't even have to look at your account. You can just follow your Twitter feed and know if the price is up or down. But appreciate everybody for tuning in. See y'all in an hour on the True North stream. Be good, Joe.